Welcome everyone to our webinar on using artificial intelligence, natural language processing, and machine learning to strengthen environmental and social risk management. We have a standing room only webinar today, and we're delighted at the interest this has generated. We're really excited about the power not only of artificial intelligence, but the potential that other emerging technologies, such as the Internet of Things, can have on the environment, social, and governance space. Thank you very much to everyone for being here today. We have quite a bit of ground to cover, and we will begin with some background on the project and how this effort came to be. We'll follow this by level setting on artificial intelligence, machine learning, and natural language processing. Then we'll get to the exciting stuff and take you through the proof of concept that we have developed in partnership with the World Bank Group's Innovation and Technology Lab over the past months. We'll then discuss some of the challenges in doing this work and close with Q&A. These are the objectives for our time together and what we're hoping to collectively achieve today. To share an understanding of concepts, to gain insights into how these technologies can strengthen environmental and social due diligence, and to share our future plans. IFC is a leader in private sector investments in emerging markets. We've been in business for more than 60 years, and we conduct comprehensive environmental and social due diligence as part of our investment processes. We have about 2,000 projects in our investment portfolio currently, and each of these projects is expected to achieve our environmental and social performance standards over a reasonable period of time. Hopefully, everyone here is familiar with the performance standards. If not, please visit our website at ifc.org/sustainability to learn more. Many other institutions look to IFC for our environmental and social standards as the gold standard for managing environmental and social risks in emerging markets. We're fortunate to have a large team of experts to help us review projects for environmental and social risks. Our specialists work on our investment projects from day one, at appraisal, all the way through to the end of the project, when an investment exits our portfolio. Our specialists visit or communicate with the client throughout the life of our engagement, and the typical duration of an IFC investment is between 7 to 10 years. As a result, we've been fortunate to have environmental and social data going back 20 years from across emerging markets. The performance standards are deep and rich with information, and on any given project, there are several complex risks which we expect our specialists to identify and manage. Further, the breadth and depth of information available for review when we're making investment decisions related to environmental and social issues is vast. For anyone who has ever had to pore over an environmental and social impact assessment, you know these are not made to be short. We took a look at this landscape of issues and realized that we had the opportunity to do better by our clients, to improve efficiencies internally, and to help the market. As a development finance institution, we have front of mind the twin goals of the World Bank Group: to reduce extreme poverty and boost shared prosperity, as well as achieving the Sustainable Development Goals. The Sustainable Development Goals are a collection of 17 global goals to be met by 2030. Achieving the global goal will require an annual investment of close to $3 trillion in emerging markets. This represents an enormous challenge and an enormous opportunity for the private sector and for IFC. As the largest global development finance institution focused on the private sector in emerging markets. Core to our mandate is asking how IFC can help drive or attract private sector investment in emerging markets, especially into fragile and conflict-affected states. We held several design thinking workshops to make sure we identified the challenges and were framing solutions according to user needs. We found that the answer for us lay in data, specifically using the data generated over the past 20 years of conducting environmental and social due diligence in emerging markets. We hope to be able to bring structure to this data and develop analytics at the country, regional, sector, and subsector levels, and to make this sectoral and country-level information available externally to encourage investors to consider investing in emerging markets. We also expect to be able to use data from past experience to help strengthen our internal due diligence, such as improving project and development outcomes through leveraging portfolio lessons and insights from experience to enhance environmental and social due diligence, and to identify success stories and action items that have led to better performance historically. We also expect for this to lead to improved efficiencies and increased time with clients. How do we achieve these goals? Enter MALENA, the Machine Learning, Environment, Social and Governance Analyst. That's the name we've lovingly given to the tool we're developing, and we'll introduce you to her in a few minutes. For now, though, I'm going to turn over to Pradeep, who's going to walk us through the fundamentals of emerging technologies.
Good morning, everybody. Thank you, Atya. So before we get to the demo of MALENA, we're going to do some level setting on the ABCs of AI, NLP, and machine learning. AI is no longer a buzzword. Today we hear about AI and machine learning, neural networks, blockchain, IoT, deep learning, and also about Google Go 1.0 game that beat human at a complex game based on the statistics fed. And then Google's 2.0 beat Go 1.0, and in this case, only the rules of the games were taught, like we learned. So now what is AI? AI is the ability of machines to learn like humans through human-like cognitive skills and apply those learning to new challenges. AI is not something new. It was coined originally in the 1950s, and since then, slow but steady progress has been made through several decades and technology advancements. And the field continues to grow in an exponential manner. But why do we hear about it so much more now than ever before? Because it is touching many aspects of our day-to-day tasks. And the main reason to these advancements are computing power, improvements to algorithm, big data, and development of cognitive services that simulate human behavior. To level set what we mean by AI in today's presentation and how we see this applied to ESG due diligence and analysis, we would like to go through a few points. we're using machine learning to analyze your project's portfolio to understand performance, ability to understand document content through natural language processing, to classify, understand the meaning, sentiments expressed in the documents. Conversational AI is being able to ask the machine questions similar to the way we interact with humans. You'll see an example of this today during the presentation as well. The ability for the machines to predict risk ahead of time based on the activity patterns exhibited by a project. Example, non-compliance with reporting requirements, compliance with labor market law, etc. Today, reports document also include image, videos, etc., and AI can assist in recognizing images and auto-classify for further analysis as well. There are many more capabilities, but that would be a presentation on its own. So here's an example of how AI is augmenting human experience by extracting insights from non-disclosure agreements and flag it to lawyers for further attention. The highlight of this is to show that for what it takes humans 92 minutes to do can be done in 26 seconds by a machine, but it's limited to standardized templates, compliance requirements, etc. It may not have all the context when new situations arise, but it shows that substantial progress made in the industry to use AI as a means to helping human productivity. So what we'll be looking at today is an augmented experience of ESG specialists and AI. Humans have capabilities that machines do not: emotional intelligence, intuition, creativity, empathy. Now, machines have capabilities that humans don't: data crunching at exponential scale without ever becoming tired. Outputs in machines are purely driven by data that they were fed. Good data may equal good outcome. Bad data will always have bad outcome. But this can be said to humans as well. When I'm making decisions from bad data, there is no guarantee that I'm making the right decisions. So the goal here is to combine both human and machine intelligence to improve productivity, learn through vast knowledge from past experience, and improve efficient decision-making by humans. Now, moving to the key part of the presentation, introducing our MALENA. So what was the challenge that MALENA was tasked with? For an ESG specialist, how can MALENA help in gathering insights from IFC's investment document, especially ESG related, to monitor progress, assess performance, and also get early warning challenges? Now, from corporate perspective, how can IFC assess ESG performance in emerging markets to benchmark global trends? This could potentially share insights with investors to help them learn from IFC's decades-long experience in emerging markets. Here's an example of what a specialist will see as a dashboard. We have laid out the project and client names for confidentiality. In this case, the specialist may receive a 200-page document on the project's progress. Now, before the specialist starts spending time reading it page by page, MALENA is able to process the document related to the project and provide insight on the risks identified. Identify what's working, reflected positively in the report, and what's not working, things that are reflected negatively in the report. Example, there were complaints of wages not being paid in some facilities that was addressed later. Here's an example of how MALENA can extract specific sections in the document that shows various issues and bring it to the specialist's attention automatically. Now, the purpose of engaging AI is not only to find the problems, but suggest possible actions to the problems based on our past experience on what worked and what did not. Also connect them to the people that worked on it in the countries where it was tried before. As we talked about earlier on the machine's ability to crunch data at scale, it can pick up correlations across various factors related to specific indicators. So when the specialist sees an issue in his or her project, They can also see the correlating factors based on IFC's historical experience. Example here is when there is a lack of quality and quantity of ENS information, there is also an influence from or relation to management commitment aspects. So based on what we see from the data. So when MALENA sees location information in the document, it can be represented in a map to show where there is progress and positive outcome and where there are pockets of challenges emerging. In addition to this, the specialist can also interact with MALENA through a chatbot. Ask questions like, what are the risks in Ghana? MALENA will go through the insights drawn from various data sources and be able to answer with the risks found. You can chat with the bot in a manner we ask questions to humans. Based on the information drawn at grassroots level, now this information can be aggregated at region, country, and sector level to get insights at global and sector level to see what countries are performing well or not in specific aspects of IFC's performance standard. The idea here is twofold. When we are designing new projects, having insight into the strengths and weaknesses in a country context can help in designing controls to mitigate risk. There is potential to use anonymized data as a benchmark for emerging market, of course, complemented by other external data sources available. That's our MALENA, and it has been a pleasure working with her.
Thanks, Pradeep. So excited as we are about this space, we are mindful of the challenges involved with doing this work. Foremost is privacy, particularly because we're engaged with supporting the private sector, including some publicly listed companies. We are very mindful and thoughtful about what we might put out in the public domain. And that's why when we get to the point of making data available externally to help support those considering investing in emerging markets, we will share country and sector information and not company-specific information. Closely related to this is ensuring that we maintain client confidentiality. We're also working with our legal colleagues to keep pace with regulatory developments in this space to ensure we stay on top of these. Before we get to Q&A, I'd like to quickly recap. We're just at the beginning of our journey in exploring the use of emerging technologies to support environmental and social due diligence, and eventually by taking some of this data externally to help other investors get comfortable engaging in emerging markets. We see great potential in making a slice of this information available. Thank you very much for your attention, and we now look forward to taking some questions.
All right, let's bring us to the question and answer portion. Can IFC advise us how quality can be identified by MALENA in reviewing documentation rather than just highlighting terms or used which correspond to IFC PS requirements?
Okay, this is a very interesting question. On one side, it is important to use our expertise, in-house expertise, to decide on the quality and reliability of information. But also related to that, because we want to have a wealth of information that will support MALENA, how are we going to manage conflicting information and decide on what is the validity of the outcomes. So this is still work in progress, and we will have to find a way to qualify MALENA outcomes based on the quality and the quantity of the data available to make any given assessment.
There's a question, technical question. How do you extract information, paragraph or section, from long and complex ENS documents And how do you relate each of them to corresponding PSs?
Okay, this is basically one of the capabilities of machine learning. And the starting conditions is that you need to identify a set of ENS key risk terms and train the machine on identifying those. And there's a labeling process that is fed into the application that helps the machine to understand which ones of those need to be highlighted.
Pradeep, anything to add on that in terms of other areas we should be thinking about when we look at labeling documents?
I think Carlos hit the nail on the head on this one. So it's about creating what we call in the machine learning world supervised learning. So machine by themselves do not know anything. It's a specialist that has to teach the machine. So the example that we used was carbon dioxide emission is high. The machine itself does not know whether it's good or bad. It's a specialist that has to teach the machine and say, this means bad. And, drinking water supply is clean means it's good. So this is where the role of specialist is very, very important. And the role of MALENA is to actually assist the specialist. And the machine, the specialist is the one that keeps training MALENA in an ongoing manner.
Will there be an auditing mechanism of the data collected before it's processed by MALENA?
Yeah, absolutely. I mean, the data is fuel for MALENA, and we want to ensure that the best quality fuel, is kind of powering MALENA. That will ensure the quality of the assessment that MALENA will do for us.
And just to add to that, IFC has very rigorous quality assurance and quality control processes where it comes to our appraisal as well as supervision processes. So there are, even before the data gets to MALENA, there is oversight that is exercised on the data. And then together with our colleagues in our IT department, we're looking for ways in which we can further enhance the oversight of this data. So like Carlos said, what we're putting into the machine is as clean as possible.
All right. There's two parts of the question here. How will IFC World Bank deal with internal censorship of project documents on sensitive projects? And if MALENA worked, how would you ensure those submitting field reports documents did not self-censor to avoid problems from Analyst conducting oversight?
So this really follows on the previous answer that we gave, which is that IFC has very rigorous internal oversight processes in place that form part of our appraisal as well as our portfolio management processes. This entails quality assurance and quality control processes that we have in place at appraisal, where specialists are subject to review not only within our department but also by an external group of colleagues. In addition to this, we have, as Carlos mentioned, we will be putting in place processes that ensure that the data that goes into the algorithm is as clean as possible. So combining both of those, we expect the data to have met a high standard before it's analyzed.
Another question, access to data is a major problem in emerging markets and especially in the private sector. Is MALENA based largely on data already collected, and what are you doing to obtain additional data?
So the one piece that we are doing is analyzing the information, of course, that's available to IFC. We believe that the most valuable aspect in terms of IFC having in place 20 years of emerging market, environmental, social, and governance data. Of course, we will be enhancing this data to the extent possible by working in close partnership with external data providers, both to collect and develop new data sets, but also through engaging with the existing data providers to the extent possible to complement the information that we will be inputting into MALENA for our use internally, but also to the extent feasible that we will be making available for the market externally.
What is your timeline for completing this project?
So as we mentioned earlier in the presentation, I think what we have done is we had first validated, right, to say, okay, is it even possible to apply machine learning and AI capabilities to contribute towards improvement of ESG data set and analytics. So, and the outcome has been good. So now we are moving forward with the scale up and implementation. And at this point, we're looking at about 6 months to come back to you with an update in terms of the progress made. And the teams are being assembled, and we are following an agile methodology so that we do this in an iterative fashion as needs emerge, as new data becomes available, so that we can fine-tune and make MALENA very rich and featureful, if I may.
You mentioned that the data is from previous projects in the specific countries in the emerging markets. How can one plug new data from a study that in a country from a specific area or industry in a given country?
So the data set that we are working with is the past historical data. That's our starting point. But as time goes by, as new projects are being done and new evaluation reports are conducted, they will also start feeding into MALENA, and what we call as the active learning is it will continue to learn from new data sets. So we are not limiting ourselves only to the past 20 years of data sets. As time progresses, new information becomes available, and that also would be processed through MALENA.
How does MALENA interact with other online resources like the WWF, Water Risk Filter, WRI Resources, Watch, or Graph System?
So just to re-emphasize, the idea behind MALENA is for IFC to leverage its own 20 years of emerging market, environmental, social, and governance due diligence data to improve IFC's due diligence internally, but also for us to explore opportunities to make some of this information, obviously keeping in mind client confidentiality and privacy considerations, making some of this information available externally in order to support IFC's mandate to increase investment in emerging markets. We will continue to look for opportunities to partner with other robust data sets that are out there and developers of this data, including the groups mentioned, to see if there are ways to complement what we are doing internally, but also to see if there are ways for us to continue to help build out a robust and comprehensive set of environmental, social, and governance data for emerging markets.
Last question we have is this a tool you would see as an internal to IFC or would be available as an open access?
So again, just going back to the previous response, the idea is for us to look for ways for us to improve our due diligence and conduct more robust portfolio oversight, learn from historical precedent, and continue to help deliver better services for IFC's clients. We are, as part of this process, exploring opportunities for us to make some subset of this information available publicly, because we recognize that the environmental, social, and governance information that is available for emerging markets at present is lacking, and we see an opportunity for IFC to enhance the information that is available in this space through providing some insight based on our historical performance. So we will continue to look for ways to work closely with our colleagues in our legal team to find ways in which we can make this information available publicly, while again keeping in mind client confidentiality and privacy considerations. Thank you again for joining us today on the start of this journey. We look forward to holding sessions in the future where we will continue to update you on our progress.